Dirty dealings, corporate battles, consumer woes. This is Evening 5. A consortium led by Khazanah-led is revising the terms for its takeover offer for Malaysia Airports Holdings to lower the acceptance conditions to at least 85%. The offer price of RM11 per share, however, remains unchanged according to a statement from Am Investment Bank issued on behalf of the consortium. The deadline to accept the offer was also extended from January 24th to February 4th, 2025. All other terms and conditions of the offer remain the same. The latest acceptance rate is the level at which MAHB is expected to be removed from the MSCI and other indices, according to a joint statement from the consortium. That may force index funds to accept the offer for the shares they control that are yet to be tendered into the offer, it said. The consortium, which also includes the Employees Provident Fund, Abu Dhabi Investment Authority and Global Infrastructure Partners, said it shortly expects to declare the offer unconditional and remains confident that total acceptances will exceed 90%. The revisions came as the consortium has only secured acceptance of 86.51%, below the 90% required for the offer to become valid following several extensions. The original deadline was January 8th, 2025. It should be noted that all 5 independent directors of MAHB had advised shareholders to reject the deal, arguing that the offer undervalues the airport operator. The consortium says that shareholders who have yet to accept the offer will face reduced liquidity once MAHB is removed from the indices, and they run the risk of holding unlisted shares once the deal becomes unconditional. The consortium also reiterated that MAHB's operational and financial underperformance will continue if it remains listed, and that the company's transformation is best undertaken as a private entity, supported by investors able to take a long-term approach. Malaysia Airports Holdings said that it is almost there for the resumption of its Aerotrain services at the Kuala Lumpur International Airport following a near 2-year suspension. In an Instagram post with footage of the Aerotrain being tested, MAHB said the system is undergoing thorough checks, tests and retests to ensure it meets world-class standards. It said that safety remains its top priority and that MAHB is subjecting the train to rigorous processes to guarantee its reliability and efficiency. Among others, the Aerotrain system has undergone an 80-point rigorous safety inspection. The next phase is a 2,000-kilometre free-fall run, which will be conducted with the Land Public Transport Agency. However, the post, which had received 243 likes as at 4:15 p.m, did not elaborate on the expected commissioning date of the project. KLIA's Aerotrain has been suspended since March 2023 after a massive shutdown resulted in passengers having to walk along the rail track in the rain halfway from the airport terminal when it malfunctioned. Ever since then, MAHB has resorted back to buses to move passengers between terminals while works on the rail system took place. On January 15th, Transport Minister Anthony Locke expressed his dissatisfaction as the completion date for the Aerotrain repair was still up in the air, pointing to delayed decisions by the MAHB board and management in the past. Convenience store operator 7-Eleven Malaysia Holdings, in which Berjaya Group founder Tan Sri Vincent Tan owns a 28.07% stake, said it is setting up 100 original cash recycling machine services at its outlets across Malaysia. The CRM services, offering cheque deposit machine and automated teller machine services, are deployed by Reachful Malaysia, formerly Abadi Tambah Mulia International Malaysia. Reachful is a collaboration comprising Japan-based 7 Bank at 50.1%, 7-Eleven Malaysia's unit 7-Eleven Services with a 24.9% stake, HQZ Credit 20% and SMRT Holdings 5%. HQZ Credit is 99.99% owned by Tan according to company search data. Reachful has already installed the first of 100 CRMs in Rawang, Selangor, while the coming installation will be made in stages in Kuala Lumpur, Selangor, Penang, Johor, Sabah and Sarawak by 2026. The CRM installation will be focusing on suburban areas and aims to offer the residents who have less banking accessibility, Reachful said. 7-Eleven Malaysia co-CEO cum EC Tan Yu Ming said about 48% of Malaysians still use cash daily, with usage reaching 2/3 in non-urban areas, citing a recent study by Ipsos Malaysia. 7 Bank President Masaaki Matsuhashi said the company's main goal is to provide a convenient alternative to consumers, making 7-Eleven a one one-stop store for everyone. Malaysia is the fourth market outside Japan for 7 banks' ATM installations. Other markets include the US, Indonesia and the Philippines, with more than 21,000 ATM installations as of 2024. Matsuhashi said that depending on future chances that they will get, maybe there will be a collaboration and do banking as well. They are also considering having facilities at supermarkets or petrol stations in the future. Fajarbaru Builders Group anticipates the upcoming Penang Medi-City Phase 1 project in Batakawan, Penang to have a gross development value of 2 billion ringgit. Bernama quoted Fajarbaru CEO and EC Datuk Sri Eric Kwan as saying that 30% of the development in Phase 1 will consist of medical components. This includes a 200-bedded specialist hospital, a wellness centre and a healthcare complex. He added that in Phase 1, the development will also include the construction of FPG Global Park, which serves as a commercial area, international school and residential area, namely service apartments and villas. Meanwhile, Penang Development Corp CEO Dato' Aziz Bakar said the corporation foresees Phase 1 of the Medi-City to be fully developed in about 5 to 8 years and 15 years for the completion of the whole project. Aziz notes that this project will also be a one-stop centre for medical facilities in Penang and the northern region. A vehicle linked to Scanwolf Corp Managing Director Aditya Leh Hong has triggered a mandatory takeover offer to acquire all the remaining shares it does not own in the plastic extrusion maker at 54 cents per share. The takeover offer was triggered after the offerer Mighty Alliance acquired a 34.38% stake in Scanwolf from its shareholders' vehicles at 54 cents apiece, according to a notice issued by Maybank IB on behalf of Mighty Alliance. The offerer said it intends to maintain the listing status on Bursa Malaysia. The collective shareholding of the offerer, joint ultimate offerers and persons acting in concert stands at 39.67% according to the notice. The offer also covers the group's warrants at 24 cents apiece and irredeemable convertible unsecured loan stocks at 18 cents apiece. The offer prices represent a 5.49% premium to Scanwolf shares 5-day volume weighted average price of 51.19 cents, 22.82% premium to the warrants 5-day VWAP of 19.54 cents and 58.38% discount on the ICAL's 3-month VWAP of 43.25 cents. Shares in Scanwolf ended unchanged at 51 cents on Monday, valuing the group at 103.58 million ringgit.